The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 11th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, and I do mean always, be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, now is not too soon. And, of course, you can also reach us at 727-445-1044. Of course, you can send me an email, steve@tfnn.com. I do my best to get to those, but, you know, I'm at the mercy of those internet service providers. Sometimes your email gets through right away. Other times it takes a while for whatever reason. Of course, inside the Tiger's Den, an instant message ping will do. So let's go ahead and get this show started on Tornado Tuesday. No, I didn't say Turnaround Tuesday. I said Tornado Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 164 points. You traded 18,164. How about that? 164 is across the board. You've got the S&P down 22 points, trading at 2141. NASDAQ Composite off 70 points, trading at 5259. Russell 2000 down 22 points, trading at 1229. The DAX closed off 46 points. The FTSE down 26. Gold's off $3. Silver's down 12 pennies. Light sweet crude off 74 cents. Leading the charge to the upside, it's Kansas City Southern up about 2.5%, $2 and change. Arch Coal up $2. Straight Path Communications up $2. Radius Health up about $2. So a lot of $2 chucks to the upside. To the downside, $2 not anywhere on my screen. You've got $46 to the downside in Illumina Inc. getting just trashed and thrashed, down 25%. Chipotle down about 3.5% or $16. Priceline off $13, less than 1%. The IBB off about $9, down about 3%. Amazon off about 9, down a little over 1%. So what are these markets doing? What are we going to be looking for today? Well, I'm glad you asked me that question. We're going to go answer that question in a couple of different ways and what it is that we want to be focused on. So let's go take a look at what it is that we know at 1:10 in the afternoon. The first place we're going to start is taking a look at the daily equity futures contract. So if you're watching us on TigerTV, my goodness, I hope you are. But, hey, if you're listening on your radio, your mobile device, we love that, too. Maybe you've got, one earphone in one of your ears. You're at work, and you're looking like you're doing something, but you're actually listening to the show. I know we've got folks that do that. Bless your heart. Thank you for that. And anyone who's listening to us, and even if you're not listening to you, we still love you. But what we're looking at here on my screen, upper left-hand corner, is the ES Mini S&P Futures Contract. Upper right-hand corner is the NQ. Again, all these are daily charts. Lower left is the Dow. Lower right is the Russell 2000. A little 10-minute delay on the Russell 2000 chart. So let's go look at the patterns that are in play here. If we look at the ES Mini, it's been in a clear descending price channel. In fact, with regard to price channels, horizontal, diagonal, I'll be teaching a course on that a week from tomorrow. All the details on the homepage at TFNN.com. So we know that it's trading in this descending price channel. Could be any clearer to you or I that that is what it is doing. So with regard to what it's doing right now, right here, right now, it's up against a significant level of support that we're going to be watching for. You say, what level of support? Horizontal level of support, this being our TAS market profile, using a weekly time frame. So it should be significant support. 2133.50 is the number, even though it says 2130.55. You can't do that. But 2133.50 is the number. We're trading at 2132.75 as we speak right now. If we see a close below that, not by $1 or $2 chucks out there, but a decent close below that, what does that tell you and I where price is going to head to? Johnny, that's right. It's going to head down to the bottom of that descending price channel. But first, it'll stop. It'll take a ride on the reading, 2116, then 2108, where it could find support. But likely, we would see at least some type of intraday push down to the bottom of that descending price channel. So, rule number one for the day, pay attention to 2133.50 on the ES Mini. You close below that, it spells some type of curtains out there. Curtains to the downside. Another move here of, we're going to call it at least 100 points to the downside. I don't know if it's at least 100, but 100 points to the downside inside the S&P futures contract. That's like 1,000 points inside the Dow, just to kind of give you a frame of reference out here. So 2133.50 is very important. Now, if we take a look at the NASDAQ, which has been the strong dog inside the market, well, guess what it's doing right now? Well, unlike the ES Mini, which had a descending price channel, this has been trading with inside a rising price channel. This is the one taking us back into the Brexit days out here. Well, today, as we speak right now, it is broken out of that price channel. So what's the number that we're going to be watching for today inside the NQ? Well, it's weekly point of control, which happens to be closer to the bottom of that box on a weekly basis, is priced out at 48.18. So we'll be watching the 48.18 level. You're trading at 48.23. Now, here's the cool thing about this pattern. What we're likely to see, and I didn't mean intentionally to do this, but I've got to do this. I think I should do this. Oh, it's not a hammer candle. I take that back. It was at one point in time out here. So I'm going to just kind of skip that whole thought process. I'll come back to it in a bit, but not right this very second. So let's just go back. Watch the level here of 48.18. Moves below that, it suggests a minimum of a move down to 47.63 inside its move to the downside out here. So that's what's going on inside the NQ. If we take a look at the Dow, here we're just going to take a look at a rising trend line. That now has been clearly broken. The Dow says to you and me that it wants to go down to 17,886. It doesn't really give a hoot what the ES Mini and the NQ want to do. It's got its own thing that it wants to do. You're trading at 18,052, 17,886. That gives us, what, about 150, 200 points or so to the downside. Yeah, that's really what it is communicating to you and I. And with regard to good old Russell, that's Russell 2000. She or he is also trading right now down at a significant point of support. It's weekly point of control, 1224. You move below that, which it's already broken through the descending price trend out here. So that's a goner as we speak right now. Price inside the Russell 2000, where is it headed? I'm glad you asked me that question. 1202. Put that on your calendar or your pad of paper. That is where price is headed to. This market today, folks, we get back, the signals are very, very good with regard to what the market wants to do. And what it's telling you it wants to do is head lower. Well, we'll take a look at that one-day rate of change when we get back, try to figure out how that factors in to today's move. We'll be right back, folks.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
At the VIX index. Yesterday we spent probably a good half of the show taking a look at it and identified for you a couple of excellent uses to help you understand what the market is doing, what it's communicating to you, what action one could take out there. And so what was brought up was the one-day rate of change, which I've shared with you. And as AG in our Tigers Den said yesterday so kindly that I've saved him a bunch just simply by learning how to utilize this tool out here. Now, the VIX index, we measure a number of different things, but one of the things that we measure is the rate of change, the percentage increase or decrease from the prior day's close. Now, if the VIX was to close if the market was to close right now, what we would see is a one-day rate of change of 18.46% out there. Now, the chart you're looking at on my screen out here, you're going to see in panel number 2, you're going to see two yellow horizontal lines. One is at a positive 10%. The other is at a negative 10%. Today, we're dealing with the positive 10%. Now, what I can tell you is that when you see a rate of change, so the most bearish thing in the market would be for the market to find some support, bounce back from here, look like the bears couldn't hold on to the losses, and the VIX index closed below something less than a 10% one-day rate of change. The bulls would celebrate. The bears would actually be the ones that should be doing the high-fiving. If this closes above 10%, here's what you should expect. Now, typically, it could be either a bounce or a bottom. This is the S&P 500 chart out here. The S&P 500 chart shows a nice rising price channel going back to February. So going back to February of this year, we can see the price has been trading with inside a diagonal price channel. And so price right now inside the S&P 500 is right up against support. If you wanted to buy something, when would you buy it? Up against support. If you want to sell something, when would you sell it? Up against resistance. I mean, that would just be the two ideal places to buy. But when we're going to go to a caller, because I don't want Mike and Norman Beach to hold on for too long, but this is important. What you should expect here. Let's say the market finishes poorly, but yet does not break this rising price channel. You have to anticipate some type of bounce. Now, maybe in the overnight and early morning hours where you see the futures contract trading to the upside. Now, how many points, I don't know. I mean, I can give you some price targets out there. But what that might be, and we'll find out here and we'll know at the end of the day, that might actually be your selling opportunity. For those of you that have not sold into this market just yet, that might be your next selling opportunity. So we'll pay close attention to that. Of course, I won't be with you, but if you're a newsletter subscriber, you can guarantee yourself that we will pay close attention to that. Now, let's go out to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you doing? How'd you weather the storm on Friday?
Well, Steve, I had some damage. I live about 16 miles inland from the ocean, and, that was kind of a cushion, but I had minimal damage, more towards, the beach area. Of course, there was a lot more because of the higher winds and everything, but
yes.
Count my blessings.
and a lot of flooding that took place as well as this, because the eye of the storm was probably closest to Ormond Beach, Daytona Beach, other than once it got up into the Carolinas. But as far as Florida was concerned, I think that was about as close as they got, maybe only 10, 12 miles off the coastline.
Yeah, that's what I heard. Well, one of the things I did hear too is, and this is typical of a lot of hurricanes, what happens is as they come up the coast, when they come north and they hit Cape Canaveral, that little, bit of land for going out to the sea kind of jogs the course of them a little bit. Yeah. And they said that did really help us a lot because it did move the eye out to sea a little bit further.
Yeah. Well, good.
Help.
Well, let's talk about another hurricane. Let's talk about the gold mining index, the GDX. You called about that. So tell me how I can assist you, what you're doing.
Okay, Steve, what I'm looking at is I'm looking at the GDX. To me, it looks like it's getting down to an area of possible support. It looks like the volume is a lot lower. And then it looks to me like the dollar has just about made a 100% move of a move. And I was thinking about going long GDX. And I was looking at the big bearish candle that we had 6 trading days ago, and I thought maybe we could possibly get back up to the top of that candle, and maybe just before we get into the gap, I was looking at maybe a $2 trade on that. What do you think?
Okay, a $2 risk or $2? What you're looking to
$2 profit? I thought the chances of it getting up to around 25-ish might be pretty good.
Okay, so let's look at so you've done an excellent job of identifying what the GDX is doing. It is, folks, if you watch us on Tiger TV, it is in the process of completing an A to B equals CD to the downside. We don't know yet if it's going to be a 1-to-1 or 1 to 1.272, but the 1-to-1 price projection is 22.09. The intra-session low so far today, 22.50. Today's session, October 11th, is 28 million shares thus far, testing a swing point from a few days ago that had 99 million shares. So Mike is dead on. This is testing a swing point, doing with lighter volume out here. So that would be one consideration. If you see a close today back above 22.84. You're trading at 22.70 right now. If it doesn't close above 22.84, then it says maybe you want to keep your gunpowder dry. The reason being is that today, right now, you're also trading below your TAS daily profile, which should have held as support because the point of control is closer to the bottom of the box. Now, the bottom of the box is 23.05. So that would be your second indication that you are close, but maybe no cigar just yet. Another reason for you to take a look at that trade is I'll just look at the XAU versus the GDX right now. Then I don't have to change charts or anything. What we can also see is that price is moving lower, doing it less relative energy out here. But what we haven't seen is any kind of cavalry bulls actually show up on a daily basis to give us that kind of bullish reversal signal out here. We're in wave number 5 to the downside inside the XAU, but it's giving us a similar message to what you're looking at. So I do believe you are looking in the right area out here.
And I was kind of looking for, like a hammer candle to form possibly late afternoon or at the close to confirm, the
Sure,
as
sure.
you say, the cavalry has arrived.
Yeah. We and hey, look, I hope so. If I look at and I hope that you're right, by the way. But if I take a look at silver out here, in the case of silver, actually gave us a buy signal yesterday. We don't have any follow through today, which is always a bit troublesome. So with regard to the mining equities, you need to see some type of bottom turn inside of silver and gold. You got it yesterday in silver. Support is really not until you get down to the level of 1711 out here. But you at least have one of the signals. We don't have a bottoming signal yet inside of Goldilocks. Didn't give us a bullish reversal signal yesterday, although it had an opportunity to. It just didn't. So I think you're fishing in the right hole. I don't know if right this second is the time for you to pull that trigger, though.
Okay.
All righty.
Thank you very much, Steve.
You bet, Mike, and glad that you're safe. Thanks so much for calling. That was Mike in Ormond Beach, who went through a tough part, as far as Florida is concerned, a tough part of Hurricane Matthew. Dow's off 182, S&P down 25. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 184, S&P's down 25, NASDAQ is off 75 points out here. So let's go back to the S&P 500. I'm really having us focus in the area where we're getting the most information. All right. And as we, well, you don't know if that's right or not. I'm suggesting that it's right. I'm going to lay out my thesis as to why it's right and why you should be paying attention to it. Now, this chart here, perhaps the most important chart to be focused on, shows the S&P 500. That is in the top panel. The next panel below it is what is referred to as the price oscillator. Now, I have a workshop, an entire workshop that I did on the price oscillator. That's included with the current promotion that the folks here at TFNN are providing to you, which is, you know, if you've never signed up for my newsletter service, for $49, you get you get 3 other workshops, one of those being the oscillator and change line. You'll understand why it's so important here in a few moments. Also, what you get is the current workshop that I'm going to be doing next Wednesday, and 2 others. So extraordinary. You know, if you're looking for education, and that's why you're here at TFNN. One of the reasons that you're at TFNN, there is none better of a deal. Man, oh man, I need to go to. You got to sign up so I can use some of that money to go get better grammar school education, right? I mean, you'd like me to speak a little more fluently than this, would you not? In any event, out here, the bottom panel of my chart, if you can't make fun of yourself, who can you make fun of? And if we take a look at the bottom portion of the chart here, that happens to be the VIX index. And so the way that we put all this together. Now, what's really important to pay attention, what is different today than back on September the 9th? Well, that's one question I would pose for you. Maybe you'll answer that. Let's look at what this chart here, or charts, are communicating to you and I. Earlier, we looked at the S&P 500 with regard to its larger price channel, right, coming back into the February timeframe. What we can see here right now is you can see the smaller little wedgie pattern. You can see that the S&P 500, in essence, is breaking through that, right? So that is not a bullish sign. That is more of a bearish sign. But what's really bearish, and it would be invisible to your eye out here. That's why I created this oscillator and change line to go ahead and put on my charts, and I give you the exact method for you to be able to do that. In fact, one of my subscribers provided me with the actual instructions for those of you that are Thinkorswim users, but you have to be a newsletter subscriber. If you're not a newsletter subscriber, don't send me an email and ask me for that tool out there. It just wouldn't make a whole lot of sense out there. But in any event, if we take a look at what this is communicating to us, with price getting below that red line, and this is not a Putin red line, this is a Stevie red line, and I pay attention to the red lines, and I do what I say I'm going to do when price closes above it or below it. And that is why subscribers and I went short the market, right? Because we pay attention to that red line. Now, what it's doing as we speak at 133, if you look at the readout right here on the right-hand side, you're going to see it says minus 0.825. Anything below 0.000 can have a significant impact on where price is headed to. A price oscillator, which this is, that turns down below 0, which it's doing, there isn't anything more bearish. Well, I can find a few things more bearish, but basically, with regard to this, there's nothing more bearish. You might say, prove it to me, Steve-O. And so I will. That's why all these trend lines are really important when we take a look at that rising price channel. And I'll take you back to another period where there was a tug of war for a period of time, not as long as this one that we've seen here, that takes us back into January, I'm saying, right, the end of December, January 2016. You do remember that decline that is in place, which was nothing more than a normal, anticipated, expected move because of the seasonal tide, because of the seasonal patterns. You know that the Santa Claus rally typically begins in October. Ends when? End of December, early January. You know the market is going to move lower in January, forms a bottom the end of January, early February. That is exactly the roadmap. If you went to Stevie's triptych school and you showed up at the counter, that is a triptych that you would have received. We can actually show that to you here if we have enough time this afternoon. But this portion of the triptych, where you would see detour signs that would start flashing would be when you have a falling price oscillator below zero, especially when there's been a tug of war at that zero line, as there was inside of the S&P 500 from basically December 15th until it finally just gave it up on January, the first trading day of the year. On January 1st out there, that first trading day of the year. So as price moved, I guess it was. And so as price moved, maybe it was January 2nd. As price moved, so we are at that same pattern right now. Now, go down to the bottom panel of my screen. See the black line? Yesterday we focused so much on the red line, if you will, the 50-day exponential moving average. But right now, today, it's the black line. What is in common with this past January versus where we're at today? You see, the VIX index is now above that black line. That doesn't mean with a one-day rate of change of greater than 10%, we shouldn't see some type of bounce. It may be small. It may be a bounce for you to add to your short positions, if we're so lucky to get it, or to take a short position inside the market. Because what we should get from this point forward, and this point forward, by the way, takes us into November, what we should get from this point forward is eventually a scary bottom. Now, we're going to see that the first sign of a bottom come in soon. So if you're not short, you can go ahead and hold on to your horses here, because even if the VIX index one-day rate of change doesn't give us a bounce, we should see something, a little bit of an oversold bounce that comes in, soon. But that's going to be not the bottom. That's going to be the sellable top that is out there. So you've got the signals that are in place here. There is no chart that I can find that is more bearish than the S&P 500. And that's the way that it is at this stage of the game out here. So if you might say, well, where the heck were you coming up with that, hey, we might get this oversold bounce? And that's an excellent question. I am glad that you asked. And by the way, if you really want to understand how to utilize that oscillator and put it in play out here, just get over to the homepage of TFNN.com right this very second. Sign up for the workshop. Come on, even if you have been a subscriber in the past and you're going to get 5 hours worth of workshops that are really TED-oriented workshops where I go really condense in essence in 3 20-minute segments the aspects that you need to know about the tool that it is that you're utilizing out there. It's a great opportunity for you to really catch up, learn some new tools, learn something that you used to use, and refresh. And whether it's buying the D point of an A to B city, but back to where are we right now? If I take a look at the New York Stock Exchange, that's the chart that's up on my screen right now. What you're going to see is a advanced decline oscillator reading of minus 159. Now, when you get to, I don't know where we're going to close today, but if we close right around here, minus 150, what I can tell you is in 2016, when we have gotten down to this level, you've seen an automatic short-term bottom or bounce area. You may say, prove it to me, and when we get back from this break, I'll have to prove it to you. But if you go take a look at the last time that we were down in this level, well, it was back in September 13th, 14th. And even after that scary September 9th day out there, the market formed a bottom. You can go back to August the 2nd, what the market do, formed a bottom. You can go back to June 27th, what the market do, formed a bottom. You can go back to June 14th, what the market do, formed a bottom. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Before we went to break, we were taking a look at this chart here, which is the New York Stock Exchange in the upper panel. The very bottom panel happens to be that advanced decline oscillator reading out here. And where we had taken this to was just simply going from right to left and identifying whenever the oscillator reading gets below minus 150, it is an automatic oversold signal out here. And you have seen, by tracking this on my chart, you've seen how accurately it works. You might say, well, how does it work like that? I don't know. I just know that it works. I know that you got to pay attention to it. There's a gotta happens to be one of those technical terms that we use out here. May 19, 2016. You got a reading down there, minus 203. So it can get below minus 150. Hey, the lower that it goes doesn't mean the worse off that the market is. It just means the more likely you are to see some type of bounce. Normally. Because what makes today's reading different than all other readings in 2016? Well, if you take a look at the reading back on April 7th, you didn't get to minus 150, you got to minus 140. We saw a bounce take place out there. However, if you take you back to February 11th, you got down to minus 130, minus 135 out here. Is that what we got down to? No, was it? Yeah, it was minus 135 out there. We saw a nice bounce that came in the marketplace. This is where I'm really going with it, though. Back in the early January timeframe, right? We took a look at the price oscillator moving below zero, right? After a short visit, a brief visit for a week or two trying to fight that zero line, then it turned down, and that's when we really started to see a huge decline inside the market, all right? And if we take a look at back in January 7th, to be specific, you had a reading of minus 176, and it continued to move lower, as did the price damage, for about a week or so into the January 20th timeframe out there. Well, that was also a time, by the way, when that price oscillator turned below zero. So all bets can be off with regard to this indicator tool when you get down to the S&P 500, turning that price oscillator down below the zero line. And what does that mean? That means you should be anticipating, looking for, especially overnight, early morning rallies out there that you can actually sell into. Best piece of advice that I could possibly give at this stage of the game. Hey, in the morning, I might feel differently when I see some other pattern that has played out overnight. right? That's why what subscribers and I do is our primary focus in the morning is take a look at what the equity futures contracts are communicating to you and I versus what the Sam heck happened last night. I don't really care what happened yesterday or at 4 o'clock yesterday because it doesn't tell me what the market is going to do this morning or tonight. That's really the reason that you want to subscribe to different newsletter services out here. So that in essence, that summarizes what the market is doing. And I do believe at this stage here, this time is different. Now, there's one other thing, one other piece of really great information for you and I to take a look at. That happens to be this 30-minute chart here for the NQ. Now, what's great about this is that the NQ has been the strong dog. There's no question about it. Intraday trading is something I have been suggesting to you, not that you necessarily do that, but this has been a market of intraday trading. That is about to go away here. I believe it's about to go away, and we'll find out in the overnight hours. What the NQ did yesterday when it made its high, when there was a little bit of euphoria, was it made that seventh wave, made that letter G to the upside. What it happened to do shortly after that took about 5 hours, not 5 hours, took at least 2.5 hours for that to form because that's part of my tool out here. There has to be given some time for this to occur out here. And at 3 o'clock yesterday afternoon, price was actually moving a bit higher. Didn't actually take out that high that took place at 11 o'clock yesterday. But the way that I track this tool, we got that nice little divergent pattern that formed out here. It's very similar to what we have going on right now. Of course, let me update it, make sure that it's still in place out here. Yeah, it's still in place. And we happen to be in a seventh wave move to the downside. Why is this important? Well, one, if the pattern actually takes hold and we see some bulls show up, give us a nice big bullish engulfing candle, you would think you would see something similar to what we saw yesterday. I say you could. You absolutely could. I don't think we will. I think this time is different. I've just really laid out for you some of the reasons why this time would be different out here. But here's the thing. If this pattern does pan out, if we do see some type of bullish reversal signal, if we do see some type of bounce, which right now the bounce would take you to about 48.40, and then we see a move below this letter G, this seventh wave move, it will be, and below a potential price relative strength divergent pattern, it'll be communicating a clear message to both you and I that yes, the intraday, wonderful intraday trading cycle aspect is basically no longer reliable. And we can expect a market to move down for about a good solid month out here. Now, the beauty of that is really what it's communicate. Well, I won't say is really what it really offers to you and I with regard to communication of what the market is going to do. You know, having a triptych, a digital triptych, is a wonderful thing, in my opinion, with regard to helping us understand what the markets are communicating to you and I out there. And what they're communicating to you and I is this, you know, with regard to presidential election cycles out here, couldn't be more clear to me. There's only two real options. There was a third option here, but there's really two real options that the market can do with regard to presidential cycles. It's up to you and I to be able to identify which cycle is it that the market is following. It ain't going to be perfect out there, and there I go using that word ain't, but I'm from the South. I'm now placed from the South. And here is the reason. Somebody posted a question, why a bottom in November? And when I say a bottom in November, this is the one you want to be on. You don't even have to be on the short side of this market right now. You could just be sitting there, going ahead and accumulating cash, whatever it is you're going to do, and wait for November. Normally, I would tell you October. I'm telling you, it ain't going to be October this year. The high comes in October. Now, when that occurs, and the pattern that really is in place out here is the one where the office of the presidency goes from one Democrat to the next Democrat. This I'm not. I'm agnostic with regard to the stock charting and the and communicating to you what the market is going to do. You know, in a personal level, no, I'm not agnostic with regard to what I think, what I would prefer out here. But that's not what this is about. I'm going to communicate to you what's already in the cards out here. Forget about all of the shenanigans, and it is just gosh darn nasty shenanigans that are out here. But here's what the stock market does. When the office goes from one Democrat to the next Democrat out here, what the market typically does is it forms a bottom, right? We talked about this, in about the early September timeframe. It can be the end of August timeframe out here, and then kind of moves sideways, moves higher, and then sideways. We have been chopping around sideways in forever. We're now basically in week number 3-ish out here with regard to when the market would form a high. It just happens to be that yesterday appears to be that day, because you're getting the type of follow-through and signals today that say, if it's going to occur, I can't guarantee it. I wish I could guarantee it, but I had guaranteed you on this air that the NDX 100 was going to hit a higher high. I know because I got emails about it, especially I think after September 9th or somebody. Then when somebody said, I thought you said the NDX 100 was going to make a higher high. And I wrote back and I said I did, and it did. Even though I said I probably shouldn't have said I can guarantee it. But that guarantee actually came to fruition. So now, with regard to who is it that's going to win the presidential election, it's really not complicated. We don't have to listen to the boob tube out here. The pattern in the market is telling us it's going to be the Democratic Party that takes the office of the presidency. And when that happens, and I'm not going to give you a date, I'm not going to say November 14th, even though it could be November 14th. The market makes a bottom. And it's a beauty, folks. You're talking about a substantial move in the market. You want to talk about Santa Claus coming early. Santa Claus is going to arrive in November, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. As we come back during this last segment here, we can see the ES Mini clearly breaking through that weekly level of support. That's all important. That's the 2133 level. We're trading at 2127 right now. So it's already broken it. If we continue to trade lower, even right around this level here, that tells us that the ES Mini is at least headed down to the bottom of that descending price channel, or at least the 2108 level. I'll say below the 2108 level out here. Yeah, it says we're going to have a VIX index that's going to have a rate of change that is greater than 10%. This says bounce, if anything, but not bottom this time around. Of course, we are using that as a conclusion because of looking at what's really going on underneath the covers of the S&P 500 and knowing that price oscillator is turned down in the absolute worst place for it to do that, where it is very bearish out here. And it really is still in line with regard to the presidential pattern that says Democrats take office. Now, if we were in the cycle where it would shift from a Democrat to a Republican, again, this is irrespective of, I don't really care who the candidates are. This is data, by the way, goes back to 1932. Somebody might say, hey, you only got 21 election cycles in there. I have to say, I apologize. That's all I can really get and have good stock market data out here that makes a hill of beans out here. You can ignore it if you want. I don't really care. But if we happened to be where the Dems went to the Republicans, you'd see basically the market fall off the cliff September 9th, which, by the way, when the market moved down lower on September 9th, I was like, oh, now that's pretty interesting out here, because where the Democrats retain office, the market doesn't fall off the cliff September 9th. But where the Republicans take over, it actually does. And then the market forms this little bottom right around October the 21st out here. Not to be exact and knocked out. I don't know if the market's open October 21st, but right around October 21st. And then it just simply bounces from there. And hey, look, if actually, so what happens if I'm wrong? What happens if the stock charts are wrong out here? Well, then they're wrong. But if this says that the Republican candidate is to take office, then what you should do is get in store for a market that moves sideways through March of next year. Yeah, and you've been pretty disappointed, I think, with regard to the market that's moved sideways. But get in store for a bounce that would begin next week sometime, take us back up towards the highs, and then just simply chop around and go sideways out here. But on the other hand, if it is really the bottom or the upper panel of this chart out here that's in place, I want you to have all the gunpowder you possibly can dry and ready to go. And even though maybe it's your candidate that doesn't win, or, kind of forget about this, I'm asking you to just focus on the charts out here and say, screw the politicians. I don't even mean that literally out here. I just mean, forget about what the heck is going on out there, and instead focus on your pocketbook. Focus on your pocketbook and how you could do yourself the most amount of good out here. And in the upper panel of the screen out here, what this says is guess what it says? It says the S&P 500 has a real good chance to get up to that 2450 area. So what you would like to see, what I'd like to see, hey, I want to see this market just get crushed between now and November, because that just improves the odds that the market is going to go zoom, zoom, zoom. And I'm not even, was that a Toyota? Who was that? Zoom, zoom, zoom. Is that Toyota? Is that Nissan? I think it might be Nissan out here. But regardless of whether it's Toyota or Nissan or Cadillac or Ferrari or Maserati out here, that's what the market will do. It will go zoom, zoom, zoom to the upside. But that ain't what's happening today. And what you should expect is this market to have made a significant enough top where we won't see the actual bottom come in until about a month from now. What's today? The 11th? Make it a month in just a couple of days. So, folks, stay tuned. Our favorite polar bear, at least my favorite polar bear, David White, he's going to be up next. Because it's Tornado Tuesday, we've got Tom O'Brien from 3 to 5 and Andy Heck to take it on home. So have a great trading day, great day, period. We'll see you on Wonderful Wednesday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.